Welcome back everybody. There are a lot of things that we will be speaking today, from changes in my portfolio. I will explain to you why did I make them, what drives my decision to buy or sell some stock, and which helps me to outperform S&P 500. I will also be commenting tech valuations and do I think you should buy or sell them and why do I think they are priced as they are right now. And at the end I will even give you a small test which will in charts explain to you things that I will be telling you in this video and help you on even easier way to understand what many investors does not. But as always we will start with my portfolio. You can see that my performance compared to S&P 500 has widened even additionally. In last period I am sitting around at a 25% return since February of this year, because that is when I moved to this brokerage account, and at the same period S&P 500 went actually nowhere. If you check list of my stocks and compare it to the last video, you can see that there is one stock missing, and I decided to sell my Alibaba stocks. I made around 25% gain on it in the last 2 months, so I decided to liquidate it. I will be speaking later about why did I do that and what drove my decision. And second change in my portfolio which I did was that I actually sold my euros and bought dollars. So I had around 10,000 euros sitting on my account, and because US dollar was weakening against euro in the last several weeks and I plan to invest in companies which are trading on New York Stock Exchange and Nasdaq, I decided to swap my euros for US dollars today, and in a few sentences and one chart later I will also explain to you why did I do that. So why did I sell my euros for US dollars? Well, if you check this chart, you can see that in last few months US dollars weakened against euros and euro went from 1.07 to over 1.17 US dollars, which means that euro gained almost 10% in last few months compared to US dollar. So I simply decided to convert my euros to US dollars. And there are a few reasons why I did that. First reason is I want dollars because I am investing mostly in US companies, so I will need US dollars eventually. I don't know if I will need them in 1 month or in 1 year, but I will need them eventually, and I simply decided that this might be a good moment to do the conversion. But another thing we might ask ourselves is, should I buy US dollar in terms of investing? Is US dollar going to gain value compared to other currencies? What is the situation in the US and what is the Fed doing actually? Well, US is generating a lot of fiscal deficits. Trade balance of the US is also horrific. US is importing a lot more than they are exporting. So all of that is not bullish for US dollar. Not to mention Fed, which is printing trillions and trillions of US dollars, which is also weakening the currency. So logically you might ask yourself, why did you buy US dollars when you know that so many things are moving towards weakening US dollar additionally? Well, my personal opinion is that, remember, I'm not forex trader, so I'm not so much into currencies, but my personal opinion is that a lot of this information is priced in US dollar. And another important thing is that other countries are doing more or less the same thing. For example, Euro, ECB and Eurozone. We are also printing a lot of euros. We are buying bonds, etc, etc. Basically, we are running same politics as Fed is doing right now. So I don't think that US dollar as a world reserve currency should weaken additionally. Maybe I'm wrong, time will tell. So you might come back to this video in a month or two and tell me, hey, you sold your euros too early. But that's completely okay, because again, I'm investing mostly in US companies and I will need these dollars sooner or later. And I think that swapping them for US dollars on this ratio is quite okay with me, historically looking. So let's move on to Alibaba now. As you maybe remember, I bought Alibaba stocks when they were around 181 euros. So remember, I bought them at European Stock Exchange, so I paid them in euros. And I sold them 2 months later when they were 231 euros. So I gained around 25% return in basically several weeks. And I decided to liquidate my position and to capitalize on my gains. So why do I sell my stocks? Well, there are 3 main reasons why I decide to sell stocks. The first one is when I need money for something else. It may be some other good opportunity for investing. It might be something in my real life. Maybe I want to buy an apartment or something similar. The second reason is the stock becomes overvalued, and the third one is fundamentals have changed. In my personal opinion, I sold Alibaba stocks because price of the stock went too much too fast. Based on my fundamental analysis, became overvalued. When I was analyzing Alibaba stock, it was the company which had market cap of around 510 or 20 billion US dollars. And I thought that that is a very good value for my money, and I bought 30 stocks. Now, in span of several weeks, suddenly that company is trading at around 650 billion US dollars. And basically nothing changed at all. If anything, circumstances in the world actually changed in a bad way, because the relations between US and China are worsening, economy is not recovering as we hoped it would be recovering, so I simply decided that it doesn't represent good value anymore. I think it was priced for perfection, and in short term I was right. After I sold it, stock actually went down almost 10%. But I'm not short-term trader, so I don't brag myself because I have guessed that the stock will go down. I didn't know if it will go down. I simply couldn't imagine a value of this company going for 15% up every single year in the future if we are now valued at 650 US dollars. Remember, I'm not speaking about the price, because price can go up infinite. I'm speaking about value. I'm doing fundamental analysis and I'm trying to find stock or the company which is undervalued and which will provide me alpha, which will provide me over 10 or 15% annual return. If Alibaba is priced for perfection and if it is trading on the high valuations, I simply couldn't imagine it going up 15% in next 5 or 10 years. And that is the minimum I'm expecting from the company that I'm investing. When I do not see that, I liquidate my stock position. Profit margins of Alibaba stock actually also went down. They are investing heavily, and although I like investing in the future, I also like profits, and I think that profits are what is driving the price of the stock. So yeah, that is another thing that I really dislike, and I simply took the opportunity and I sold my 30 stocks for almost $2,000 of gains in only several weeks. When the stock is priced for perfection, it is trading at really high valuations, and when my stocks are trading at really high valuations, I don't sleep well. Because I know if the company doesn't deliver perfect results, if the company doesn't give perfect guidance for the next quarter, the stock price will tank. We can continue this topic by examining valuations of tech companies. For example, you can see this chart of Netflix. It really delivered great results in their quarterly report, but as you can see, their guidance wasn't perfect. Their guidance wasn't as analysts were expecting, and the stock price fell over 10%. Remember, they really delivered great results in their second quarter. You can also check these quarterly results from Microsoft. You can see that their revenue really grew significantly. Their gross margins grew significantly. Yes, their net income has fallen a little bit, but overall, their results were really decent. Also, their CEO announced many new products, so they are investing, they are innovating, they are achieving great results, great profitability, they have almost perfect balance sheet, and their stock also fell down after the earnings. You can see that clearly on this chart. Tesla also delivered quarterly results which were quite nice. Revenue did fall a little bit, but their profit margins increased significantly. You can see here that last year, for the same period, they lost over $2 per stock, and this year they are earning per share 50 cents. To see profitability is really great results for Tesla shareholders. But their stock also went down over 10%, maybe I think now even 20%. You can see on this chart how sharp the sell-off was. The point I'm trying to make is actually that I want to sleep well. I want to know that my company is growing cash flow, I want to know that my company is growing their profits and their earning per share, and I want reasonable valuation. If I can get all of that, I will be invested in that stock forever. But if I see that price of the stock that I'm invested in is growing much faster than it should based on results that company is achieving, I will sell those stocks. I don't care if I was holding them only 1 day, 1 week, or I don't know, 1 month. But stock price and earnings results of the company must follow each other. If the earnings are growing and the stock is not moving or is falling, I will invest more money into this stock. Same goes for the opposite way. If the stock is growing faster than the results of the company, I will sell stocks of that company. So I will give you a small test right now. Let's imagine 3 companies. I will tell you later which one are they. Let's imagine company A is worth around 75 billion right now, and in 2019 it has earned 7 million US dollars of net income. Let's imagine company B is trading at over 250 billion US dollars, and in 2019 it lost almost 100 million US dollars. So it is not earning any profits. And let's imagine company C is worth around 110 billion of US dollars, and in 2019 that company C has earned almost 20 billion of US dollars. So which company would you buy? Would you buy company A, which has earned almost nothing, and you have to pay 75 billion US dollars for that company? Or would you pay almost 300 billion for company that is losing money? Or maybe C, would you buy company for a little bit over 100 billion, which is earning you almost 20 billion US dollars per year? Of course, you cannot value company only based on these two metrics. But for the sake of this test, let's imagine you have to. Of course, all of you would pick company C because it is earning the most profits, right? But if I would ask you, if you would buy Zoom company, Tesla company or Citigroup company, I think that most of you would say that you would buy probably Zoom or Tesla, right? Because they are much cooler company, they are growing faster, there is a lot of good story around those companies and their future. But the story is not paying you dividends or doing the share buyback. The story is not returning you any money. That is why I personally am focusing solely on net income and on free cash flow. I completely respect people that are investing in these high growth companies which are built around the story. And I wish everybody to achieve great results and to earn great amount of money. But for me personally, company has to earn a lot of profits, and that is what is driving mainly my decision when I am deciding in which company should I invest my money. So again, look at these three companies. Look at how much every single one of them is earning and look at how much do they cost right now. I personally advise everybody not to follow the story, not to follow any promises, and not to follow excitement. Try to follow cash flow, try to follow net income, try to follow share buyback and dividend. That would be all for today's video. Thank you very much and see you next time.